Hey everybody, this is Spooky's Revenge, and I just wanted to start this video series to walk you guys through my project. I'm going to take $500 and turn it into 6 to 7 figures within hopefully 5 years. This is in addition to everything that we teach in the Discord to our members. We're going to take things beyond just the individual trades, so it's not just going to be breaking up your portfolio into 10% per trade, breaking up your buys, scaling out of profits, all that good stuff. That's already under control, assumedly. So I'm going to demonstrate how to take those trades and the profits and the position size management and all that good stuff that we teach and turn it into compound wealth. So let's go ahead and dig in. I'll go ahead and pop up my spreadsheet here. I'm just going to make this full screen hide my face for now. So this is a spreadsheet that I made to kind of demonstrate the plan that I plan to implement over the next 5 years. You can see here there are 61 entries here, at one every month from September 2023, starting with $500, all the way up to September 2028. Now this only shows the contributions, so I want to disclose that up front. This does not include P&L being added into the compound growth. It doesn't include dividends. It doesn't involve the wheel strategy profits, any of that stuff. These numbers are just a reflection of the total contributions and how they'll be allotted for investments and speculative trades. Now this first column here, the second column here, the contribution amount, I'm just going to put $500 in every month. This equates to about $250 bi-weekly for people who get paid bi-weekly. If you have $250 to spare, that's great. If not, just do what you can. The most important part of any investment portfolio strategy is just making consistent contributions. If you only have $50, throw it in there if that's your plan. It's okay. It does add up. It does build up nicely. And we're not concerned with, making $1 million in 2 months. This is a lifelong thing. Expect to go for at least, 5, 10, 15, 20 years before you start making, sufficient income to replace your hourly wages if you're not as skilled or aggressive as a trader. Okay? And even if you are, investment's a lot more stable, especially in this kind of economy. So let's go ahead and dig into it. So every month, just for the sake of keeping this relatively efficient, I'm going to throw $500 in to this portfolio. It's a small cash account. I just started it over again. So in the Discord, I was in the habit of just trimming the profits every time I got up to like 750 or so. And then just trimming it back down to 500, 300, 250, whatever the members kind of needed to associate. So right now I'm just going to start it over back at $500. I think it's up to like 580 or something right now. And that's just because it's, we're almost through September. So I didn't feel like trimming it again this week. All right. So this puts us on the first line here. And what this means is that the total contribution value that we've committed so far is going to be $500. That's all I put in on October 1st or somewhere around there, because I have to wait for the funds to settle. That will be another $500 added into this portfolio, which will bring the total contribution value up to $1,000. And then again in November, I'll do it again. That'll be $1,500. Then December for the fourth contribution, it'll be $2,000. So you can see, just from contributions alone, we're already at $30,000 by the end of this process. Okay, so at this point, it's just a savings account, and there's nothing, really associated with trading going on. Okay, but the total contribution value does matter, and it becomes very important because we're going to break it up. I'm going to use a 70-30 split, meaning that 70% of the portfolio value will be assigned for investments, and this is going to be dividend stocks mostly early on. Once I get around 25K or so, it should be next year, I assume. That's the plan anyway. I'm going to ramp it up to include dividends, wheel strategy, and some other types of strategies for passive income. Okay. And then for the rest, the speculative amount, that 30% of the portfolio, this will be for speculative trades. This is going to be day trades, swings, maybe some option trade once we get over $1,000. And then for right now, since it's a small cash account, I'm going to use 1/3 of that for the daily speculative allotment. And all that means is that since I'm on a cash account, I have to wait for funds to settle before I buy things again with those proceeds from when I sell shares. So I can use 1/3 of that and just roll that indefinitely, day after day after day, and I'll always have that source of cash available for those trades. Okay, and you can see by the end of this, again, just from contributions alone, that daily amount is $3,050. Okay. Now that doesn't include whatever's allotted for swings and things like that. So if I do take swings, I'll just take it out of the daily amounts. And one other little caveat that I'm going to do, it's another early investment strategy. You can see here pathway number 2, the contribution amount goes from, the speculative amount goes from 150 to 300 to 450 back down to 100. And all that means is that once I exceed $500 for the speculative amount right here in column E, I can take 500 of this and put it right over into the investment allotment and get those dividends coming in a little bit faster, a little bit more aggressively. And in theory, I could just repeat that over and over and over again, and that is the difference between these two graphs. So graph 1 here is the 70-30 split all the way through. That's what I intend to do, minus this one particular shift, I call it, where I take $500 out of the lower level speculatives and put it into the investment block. Okay. And then pathway number 2 here is just what happens if you just keep the speculative amount below $500 and put everything excess into the investment. You can see that the amount available for dividends and passive income strategies is much higher, and the speculative trades is much lower. So if you're maybe a newer trader struggling, you can't really find that consistency. Maybe you just find yourself in a cycle where you're depositing paychecks and giving it all to like SPY, for example. This is a much safer approach because you're just putting a lot of your money into passive growth and dividends, which are much more stable, and you're not kind of gambling. So once you find that consistency, then yeah, you can kind of break up that ratio a little bit. But if you're just looking to protect yourself, this is the way to do it. Yeah, so let's go ahead and dig in. This is the plan. So again, we're on month number 1, September 2023. You can see it is September 18th right now. So we got about another 12 days before the end of the month. And I just have the $500 to work with, 150 for speculative trades, 350 for investments. And again, I'm a little bit over that, only because I already had a bit of a head start. So this month you can see here I've got 580.94 total. Well, 581, it's fluctuating a little bit. I do have a day trade here on OTLY. It's an older one. It did officially close, but it didn't quite stop out yet. So I'm just letting it go, seeing where it goes. I still like this one just for a personal trade, but the alert is officially closed for a loss. I also have a KLXE swing as well as a 9 swing. So I like both of these. This one is a bounce off support with divergence setup and a big old engulfing candle off support. So I think we're probably going to see some higher supports. It's holding so far. It's just taking a while, and that's okay. I'm not in a rush. And then for KXLE, we have a similar setup. We had a nice little divergence setup here and a big engulfing candle off of the 20-period moving average. It's hidden at the moment. Let me just turn that on. You can see we got a BAC right here. And so far, so good. We're just waiting to see where those go, plurals. And that's it. So you'll notice these other 2 positions in here. I have JEPQ, which is the JP Morgan Nasdaq Equity Premium ETF, and I also have J&J, which is Johnson & Johnson. Johnson & Johnson is kind of in everything, so I do believe this one has a pretty good dividend potential as well as good growth potential long term. And it's important to look at the weekly and the monthly time frames when you're looking at these, because these are several year investments. They're not, hold it for a couple of weeks and then sell it. So here's JEPQ. You can see it's a very, very aggressive push to the upside on the monthly chart. Weekly chart's a little more stable. And then, of course, the daily chart is kind of showing a little more short-term resistance and things like that. So that's exactly what I like to look for. I don't like to look for things that are, trending down over time and hoping they come back and all that good stuff. I'm looking for nice, stable growth and solid potential. So let's go ahead and look at each of these companies. For JEPQ, you can see here that there's not a lot on FinViz. They just don't have the information yet. There's just nothing good that we can really use here. But it is a good dividend yield. So let's go ahead and look at stockanalysis.com instead. So if you go to stockanalysis.com, type the ticker in, and then head over to dividends, you'll see that this has an 11.48% dividend yield, and they pay out monthly. That equates to a $5.53 annual dividend with a payout ratio of 346.55%. The most recent ex-dividend date was September 1st, which means the next one will be October 1st, since it's monthly. Okay, and you can see here that it's not a lot. You can see it's sub-dollar, it's less than half a dollar, but it is monthly, and that's all I care about. It's a nice cheap stock. It's $48.30 right now. Or I'm sorry, an ETF. It's not a stock. So this is one that I can just accumulate massively, and I just have to keep an eye on their dividend catalyst. So if they decide to cut the dividend in half, for example, I can always downsize that position, but over time it should be going up. All right, so let's look at Johnson & Johnson next. So this one obviously is a much more known company. They're very present. They've got good institutional ownership. The only thing I don't really like about this company is the quick ratio and current ratio. I'd like these a little bit farther above 1.0, and that's just their short-term liquidatable assets compared to scheduled debt and so on and so forth. But I do like this one, even though it's moderately diluted. For a stock that's in this realm, the 160 to 180 price, this would be relatively heavy for dilution, but they're okay. I mean, they're well diversified as a company. They've got plenty of good stuff on the horizon as well. And we can take a look here just for, again, just being we're a catalyst. You can see that we've got a July 20th before market open earnings catalyst. So we want to be a little bit cautious going into the next month or so, just so they don't drop anything on us as a surprise. So, all right, Johnson & Johnson dividend information. So this has a dividend yield of 2.95%. So this is much, much smaller than the 11.48% that JP Morgan offered. But that's okay because it's a more stable growth company, and they pay out quarterly at a higher cash amount. They pay 2.5 times what the JEPQ does. Payout ratio 96.55%. Dividend growth is important. This is basically how much distance there is between each of these dividend amounts. So it's roughly 6%, which is good. Ex-dividend date here was August 25th, so we can add 3 months to that because it's quarterly. So November 25th will be the next ex-dividend date for this guy. All right, so we're all done looking at those, and there are a couple important factors that I want to highlight here, and that is that this is a different strategy. It's not buy, sell, buy, sell, buy, sell. Okay, there's much less risk exposure in the terms of speculative trading. And what that also means is there are some tax advantages. Since we're taking 70% of the portfolio of the contributions and we're putting them into investments, we're not selling those. We're holding on to them, which means we're not responsible for realized short-term capital gains tax for those shares. It also means that we can't use the realized losses on our taxes because there aren't any for those. But we do have the speculative allotment. So what that's going to do is take 30% of our money, and that's going to reduce the tax burden overall because we're not trading a whole lot of money on these speculative trades. We're just taking a third or 30% of the account pretty much, and we're trading, the options trades, swings, day trades, things like that. So when it comes to short-term capital gains, that's a roughly 37% tax rate. So if you sell something and you haven't held it for a year, you get a higher tax rate. Long-term is much lower, and that's what we're aiming for with the investments. That way we're not really responsible for the taxes as aggressively, but we still get those dividend payouts coming in, so those are still a factor. But the cool part about the speculative trades is that as long as we don't re-enter something within 30 days of selling it for a loss, we can use that loss in most cases on our taxes to offset the tax burden, which is, we get to claim 100% of the losses, but we're only responsible for 30% of the profits or 37% of the profits. So just through position management alone, we've taken 70% of our capital and we're not really applying taxes to it. And then we're taking 30% of that and we're using the potential losses to offset by almost 3 times the amount of the profits that we're going to get. And we're using disproportionate profit to loss ratio, which means we should be winning more often than we're losing anyway. So we're going to keep the losses nice and small. We'll get to use those on our taxes. It'll balance out nicely. Profits will probably be somewhat aggressive for this account, but it's not going to be anything super crazy. I'm not going to go trade SPY 0 days all day, every day. But we will have a nice low taxable amount, I would assume. We'll see how it shakes out. And then we don't have to worry so much because we're going to have the bulk of our capital sitting there, just accumulating dividends. And I'm going to take those dividends and I'm going to reinvest them. I'm going to add more contributions in, and I'm going to reinvest that money. So really what we're doing with the active short-term speculative trades is we're feeding the compound growth machine. And that compound growth machine will eventually outperform the short-term speculative trades and their tax burden and replace you know, any potential growth pretty significantly. So it's just a matter of reaching that tipping point. So it's important not just to look at the individual trades, and that's why I'm doing this, because most people just don't have a plan beyond just, oh, I'm going to make a bunch of money. You know, most people's short-term goal is to hit 25K. Because then they can use a margin account and they get the instant settled funds. That's really the only number on the horizon for them, unless they have, you know, like medical bills or they want to buy a house or something like that. So it's important to identify what your goals are and make a plan that consists of actionable, specific steps for you to follow. And it's okay, you know, if something happens like in December and I, you know, for whatever reason can't add $500 in, I would just offset it by 1 month, because, you know, the next time I'll try, right? I'll just try to add another 500 there. And I can always add more too, but for the sake of demonstration and consistency, I'm just going to keep it at 500 for now. And it's just important to keep yourself consistent. Trading and passive income should be passive and stress-free. It shouldn't be something you become a slave to. So don't become a slave to the market, and, you know, make sure you're squared away financially before you start investing and things like that. Now, here's the disclaimer portion. I can't legally give you financial advice. I can't give you tax advice. I can only tell you what I would do and share education. So it is always better, in every regard, to seek out the advice of a locally licensed tax professional or financial planner or an investment specialist if you are interested in following anything in this video. All right. But I can teach you guys all the education. I can teach you about the watch sale rule. I can teach you about dividend reinvestment. I can teach you about short-term, long-term capital gains. I can teach you all that stuff, but it's up to you to figure out which portions of it apply to you and your individual circumstances. So with that said, this is the first month of this strategy, and I'm just going to keep trading. Today I have $40 freed up from the $50 daily speculative allotment, so I'll go ahead and trade that later on in the morning. And we'll see what it does. We'll just keep doing this every day. I'll try to post an update as often as I can. And next month we'll double our portfolio value. I'll add another 500 in. And then anything over that anything over that speculative allotment, I'm going to trade as investment allotment. So if I have, you know, if it's the first month and I have $150 to allot for speculative trades and I end up with, you know, $300 in that portion of the portfolio, I'm going to take 150 of that and put it over in investments, and I'm going to start acquiring more of these shares for these ETFs. All right, so we're off to a good start. Hopefully this video wasn't too long or confusing. If you guys have any questions, you know, you can always ask. So please feel free to do that. This is Pookie's Revenge, and I will follow up with you guys next time. Thank you. Bye.